So, hello, thank you so much for being here today. Could you please start off by introducing yourself?
Yeah, I'm happy to. So my name is Morgan Malzano Garrity. I am currently a second year associate at TPG Capital, which is a private equity firm based out in San Francisco. Prior to that, I spent 2 years at Goldman Sachs investment banking, and then before that was a Cal undergrad.
Great. So, I would want to start off by just knowing what your entire trajectory and arc looked like from freshman year, or like what your realization of the profession you wanted to go into on to now. So, what has all of that been like? Just a summary.
Yeah, so I have a little bit of a weird story. I thought I wanted to do chemical engineering for no other reason than, the Yahoo Finance article I read said that it was a good career to go into, and I liked math and generally liked AP Chem. I think I unfortunately just didn't really know about private equity, investment banking, a lot of that coming into Cal. Got lucky in the sense that I ended up kind of like falling into private equity job waiting tables and meeting the COO, and he kind of said, have you heard of private equity? It's like merges quantitative and qualitative and all of that. So I ended up working at a private equity firm for a couple of years in undergrad. And I think the main thing for me and why I really liked it vis-a-vis, chemical engineering, that potential route, was generally that it really does merge both those things, right? So there is a very kind of robust, granular approach taken, quantitative approach taken to the way we look at businesses on a day in and day out basis, right? It's like understanding their KPIs, like really understanding financial performance. But at the same time, you do have to make a qualitative judgment on what does the market look like? What does the competitive landscape look like? What does differentiation look like? And then beyond that, it's really relationship driven, and being able to source new deals is about your relationships within the network and understanding kind of where to play and how to play, and bringing in strong management teams and working with management teams and being very operationally minded is still really important in what we do. And so I think seeing that bridge and also kind of being able to work with founders, like actually building businesses and getting to touch a number of businesses, not just one business or two businesses, but touching 50 a year, I think is pretty meaningful. And so kind of loved that. And I think the important thing when you think about a career and like investing more broadly is that an amazing place to start your career is in banking because of not only the network that you build, but really the technical skills that you get on the job, and your ability to get access to such like senior level management teams at a really young age, I think is really, really unique. So I ended up quitting that job and recruiting for banking, got the Goldman offer, had an amazing experience there, but that sort of propelled me into TPG, which is a larger cap private equity firm where you get to work on larger checks, larger deals. And yeah, that's kind of the general trajectory.
Okay, great. Thank you. So, you spoke about, I think, just like the mix of technical and social that is there in your field. So, could you like maybe break down, firstly, for just in layman terms, what private equity is, what you end up doing in the most simplest way, and where both of those lie, the social and the technical?
Yeah, happy to. So I think at kind of the highest level, so at private equity, essentially we have a fund of several $billion of capital that we can deploy in businesses that we take majority stakes in. By that we kind of take a majority ownership in the business, and we're able to control the direction of what they do, right? So we're able to hire a new management team, we're able to determine the different products that they launch, where we want to do additional investment, whether it's in sales and marketing or research and development or building out new headquarters, things like that. So we kind of take control of the business, and we would kind of determine what changes we make operationally. We would hold that business, i.e., remain the owners of the business for anywhere from 3 to 5 years, sometimes longer. And then we would look to sell it to another private equity firm, or bring it to the public markets, or maybe kind of roll part of our stake. So it's really the highest level, buying businesses that we like that are in kind of growing markets where we see an opportunity to unlock value, i.e., make some changes operationally. Once we acquire it, then making those changes. And so being an owner and manager of an operator of that business, and then eventually looking to exit that business. So it's kind of a shorter duration hold than you would think a VC or some company that's at a different point in the growth inflection curve. And typically, the difference between private equity and like growth equity and VC primarily is the maturity of the businesses and the amount of cash flow that they're making, right? So we're typically looking for more mature businesses that have strong cash flow, because we would use leverage to typically buy it, i.e., like raise debt. Whereas growth would be, probably potentially no debt, just like pure equity, because the business is not yet making money.
I actually did not know that. That is so cool.
Yeah.
Just to know, like, because that little thing makes all the difference.
Yeah.
And so what does a day in the life look like in terms of, yeah, so your role in your job?
Yeah. Oh, sorry. I forgot to talk about the, the quantitative and qualitative. So I would say primarily what we do is right now there's been like a large sell-off in kind of the public markets. And so we've been able to look at a lot of those businesses. And so, for example, they would say, you know, my VP would come to me and say like, oh, I want to look at company X. And so what I would do as the associate is I would kind of see as much information I can get about the business. So if it's a public company, there's financial information out there and I can look at that data, I can cut the data and get a sense of, okay, how are their numbers actually trending? Are they growing? If they're growing, how is growth accelerating or decelerating? And then from there, I would also like potentially do expert calls or talk to other like C-level executives that are in whether at this company or at various companies, wherein I can get a sense of, I can ask them the real questions, right? Like I'm no expert in any one field because I touch a lot of fields. And so it's helpful to be able to talk to somebody who's been the CEO of the biggest competitor for 40 years and just ask them, you know, all of the important questions so I can get a better sense of what that market looks like. And some of the points of differentiation. So like, where do they win and where do they lose? And so it's really cool to be able to talk to those type of, you know, people and professionals at, you know, 26 years old, and be able to learn about businesses, like learn about the ins and outs, where they win, where they lose, whether I like it or I don't like it. And then eventually you would put together a set of materials that typically includes kind of your summary judgment, all of those things, and some data. So how large is the market opportunity, things like that. What does the competitive landscape look like? And then we would typically build a model that would kind of reflect our view on how is business going to grow over the next couple of years? How profitable is it going to be? And then what does that imply in terms of our returns if we were to make an investment in that business? Once you've completed that, you would usually pitch it or kind of like present it to your team. And I think what's cool about this is like you can look at a business where you're writing like a $5 billion equity check and you're, you know, me at 26 pitching this to my team and telling them whether I like it or I don't like it. And that typically is like a deciding factor in terms of whether we spend time in it or we don't. And so if it something we spend time on, we typically bring into investment committee, we'd meet with management, we'd have like a lot of ongoing discussions, get access to more data, et cetera. If we don't like it, then it's on to the next deal. And so it's very deal oriented like that.
That sounds really fun. And you spoke a lot about data science and modeling and like looking at all of that. So where did you acquire the skills for that? Was it like just over time? Or do you recommend like learning that in school? What was your experience with the data part of it like?
Yeah, it's a good question because I think in undergrad, you want to be able to model and you think it's so important. I would say where you actually learn it is like on the job in banking because that's where you get real experience. I think for me, what was really important in undergrad in terms of how I built my skill set is I think in this industry, accounting, although it sounds boring and sounds like the class that you don't want to take at Haas, is very important and really is like a fundamental thing of how we think about building each one of our models and cutting data and all of that. And so I think that was really important for me in terms of building my skill set. I would say also just like reading about industries is really important, although it's not the data side of it as well. Like the judgment call that we make here is just like purely qualitative and purely your opinion on things. And so although it's really not a science, more an art, as we always joke, I think getting that experience and being really excited about those things, like when you're, if that is who you are, then I think you're going to fit in great in this profession. And like being very intellectually curious about different industries and companies, like that kind of just like bodes well. From a qualitative perspective, I generally believe you'll learn most of it, or sorry, quantitative, I generally believe that you'll learn most of it on the job. And so I kind of stress like, don't worry too much in undergrad. I would say obviously for interviewing, you kind of have to have the base accounting and all of that. But like the modeling skills, it's just not worth spending your weekend trying to build some model. You'll get a much better experience at whatever bank or firm you're at.
That sounds like really good practical advice, especially with just keeping up to date with industry knowledge and reading up on that.
Yeah.
So do you have any like recommendations or go-tos that you look at, or maybe just like you would advise someone of our age to look at if it's
Yeah.
basic?
It's a good question. I think obviously I'm a bit spoiled in that I have all of the resources of TPG that I prefer. I think things that for me, I like love fintech. I think it's the most interesting industry, so I kind of follow that, you know, obsessively through a number of different kind of articles. I would say Financial Times is probably one of the best. I think they do a good job covering everything. PitchBook is another one. I don't know if Cal gives access. They might in some ways. It's just interesting to like see all the companies raising money, what they're raising at, what the articles are about it. And that's really how we end up kind of like tracking things. And then most of the time it's like research from analysts that's probably not as great for undergrad, but so I don't think you would have access to it. But I think just like generally like Financial Times spin that. I think Bloomberg's pretty good as well. Both of which I think Cal probably has discounts for, but those are kind of my favorite to follow.
Yeah, a lot of that is very accessible to us, so that's exciting.
Okay, good.
Yeah, and okay, I can definitely see how much you like your job and like the good parts of it are coming off. What about the bad parts of it? Like, what would you say are just some things that on a day-to-day basis are kind of annoying or stressful or whatever it is?
Yeah, so I'll maybe take it in two. So I think investment banking is one thing, private equity is another thing. Although there's probably some similarities of what sucks about them. Truthfully, not sucks, but I think there's obviously things that are harder. I think generally speaking, the hours are pretty tough and pretty long. I think it's a little bit more deal oriented in private equity, i.e., if you're looking at a business that has a high probability of going through, you're going to spend a lot of time looking at it. I think the other thing that can get a little bit harder is like just the amount of data sometimes that we get access to and we have to cut. I think obviously after you've kind of I've been in the role for a year, and like what excites me is really like thinking about the market and thinking about the competitive landscape and trying to make those judgment calls and spending time with experts, consultants, and everyone trying to really understand that. The other side of it is there's a lot of like qualitative data cutting that you have to put onto pages to then make that judgment. And it can be a little tough when you're more junior and that you have to spend a lot of time doing that. I think it's great experience and it's like really meaningful. And that's oftentimes the reason that we make an investment or we don't make it. But it can just be, you know, a lot of work, a little bit tedious, and honestly not as fun as like figuring out if we like the market or not. And so I think that can be a little hard of it. I would say from a banking perspective, what I didn't like was it's just very transactional. It's very transaction oriented, right? It's a transactional role wherein you're working on a specific deal type, i.e. the company wants to go public, they want to sell themselves, they want to acquire a business. And once that's done, you have no ownership or engagement operationally with that business. You have no idea how it plans out because you're not a part of that team and you're not making an investment in it. You're just helping them with one single transaction. And I think that's where I knew I wanted to do investing, is because it really pivoted me into I care about what we're thinking about and the transactions that we're doing. And I care about, you know, how they're actually making money or how they are improving operationally or what new markets they can go into, or if they acquire this business, what does it look like as a pro forma business and what can we continue to do to add value? In banking, you don't get that, right? It's just you get slapped on the next deal the day after and you kind of forget about that. I think that's a little bit harder. I would say on the flipping back to the private equity side, you get a longer duration hold. You get to actually execute that plan that you guys are talking about. And that's really exciting because it's much more operational. The other thing that's a little bit harder is that you're typically working on more like later stage businesses. So for example, at GS, I worked on like a firm and Lemonade, like these businesses that were super exciting, very high growth, really like kind of sexy businesses. Here, like we don't look at those because they're burning millions of dollars of cash, and we couldn't make an investment there. And so it's kind of a give and take. That being said, we can do structured things and more complex deal types, which you can't do for those businesses that are higher growth. And so you kind of, there's gives and takes in terms of what you like. If you're someone who wants to be investing in a firm, wants to be investing in Lemonade, doesn't really care about you know, the way that we structure the deal or the leverage we can put on it, or you know, the ability to change it operationally, you kind of just like want to be able to invest in a firm. That's more of like an earlier stage investment, right? That's like growth, VC, things like that, wherein you're kind of throwing less money at more things. We're throwing more money at less things in private equity. And so those are kind of the gives takes of it. And I think it fits different people's personalities, kind of which one along that investing spectrum you like the most.
That is so helpful and so detailed. Yeah, I definitely have not heard that kind of insight before. And so what about the diversity or just the social aspect of the industry in terms of like being a woman in business? How do you feel about all of that? Was it jarring at first? Like, what's your experience been with that, good or bad?
Yeah, it's definitely something that I've like thought about a lot more and more, as particularly as I've kind of like gone further along the path of my career. I think in banking, at GS, they did a good job at, kind of the analyst level and associate level and a little bit the mid-level VPs of kind of having 50-50 gender equity, and maybe not exactly, but a little bit closer to it. I think particularly at Goldman, they do a good job of that. But then as you looked up to your MDs and the partners, there was no females. And particularly like no minorities and diverse candidates, unfortunately. And then when I kind of came, the main issue that I kind of have with it is that for private equity, I signed my job at TPG kind of 1 month into my job at GS, so 2 years early before I started. And I think what that culture creates is somebody who really needs to know, I want to do private equity the moment that they graduate undergrad. And I think it's hard to have that visibility because most people haven't had that experience. And I would say the other thing that's hard about it is, for me, I remember I like think about this now, but when I was recruiting, somebody who had worked in private equity before, I felt like I was not ready to recruit. I like didn't have all the qualifications. My male counterparts were way more prepared. They were way more bullish on it. And I think too, for me, like my socioeconomic background was not such of that where my parents worked in high finance. Like I didn't have any of that. And so I think I felt very underprepared and almost like didn't recruit at TPG. And the unfortunate reality is that that cycle sort of continued to play through. So I've been at TPG for 3 recruiting cycles, and I continue to see that the female candidates oftentimes opt out of recruiting early because they don't feel like they're ready, despite the fact that they're probably just as or more ready than their male counterparts. And so I think the unfortunate reality is that that plays into what the demographics are of the class. And so you start to see kind of less females go into private equity as opposed to banking. And then as you kind of like look up the funnel, it's kind of less and less females. I would say that TPG as kind of an institution definitely wants to change that. And one of the things that we've been talking about is kind of like working with freshmen, sophomore, and juniors at Cal and other schools where we have connectivity to tell them what private equity is before it's too late to like get into it. Not that people have to do it or want to do it, but just give them exposure, because I think unfortunately the people that tend to go into this industry are people whose parents had some experience in it or relatives or things like that. Just given how early the timeline is and recruiting is. And so I think that you see that play through into the demographics and just not having as much diversity. That being said, I think it's something that people are conscious of and actively want to change. And so the one thing that I don't think that I've had an issue with, luckily, is like finding people that want to mentor and sponsor me, despite the fact that they don't look like me. And so for that, I'm grateful. But also, also want people that look like me and have similar experiences to be able to relate to at a more senior level. And I think particularly for a female in an industry that's pretty tough in terms of hours, you want to be able to see a path to like having a family and having a sustainable kind of career. And if you don't see an example being said of that, it's hard to see yourself as that example because you don't really know what it's going to look like. And so that's been one thing that I've been really thinking about and trying to push more of, because I think the more women that stay, it's just going to perpetuate and kind of be an exponential growth. But unfortunately, it just really hasn't played through in private equity yet. It's starting to a little bit more investment banking, but just not so in my industry.
Yeah, I mean, in theory, I've read up about so many of the things you just mentioned. So it's crazy to know that it's really out there in the world.
Yeah,
like I think I heard that LinkedIn conducted like a study of the fact that men are a lot more likely to like overestimate how jobs and apply on the LinkedIn thing than women are. And private equity definitely sounds like a really flashy, sort of like high profile industry. And so it's easier to underestimate yourself when thinking about it. So I'm glad like information dissemination is so important.
Yeah, totally. I think, it's just been, it's like, I think it was like I read the same thing. It's like 2 out of 5. If men have like 2 out of 5 qualifications, they'll apply for a job. Females, they need to have 5 out of 5. Like that's what ends up happening. And so totally to your point, that's what you end up seeing, which is super unfortunate, and I hope changes. And I think the one thing that is really hard to capture in diversity recruiting is like, what are people's socioeconomic backgrounds? And when I was at GS, I think, I would say probably 70% of my class had parents that worked in investment banking or finance or private equity or one of those industries, which is just insane. And that tells you kind of what's wrong with the recruiting. And it's a question that I like have, which is like, how do you kind of filter for that? And I think it's, to your point, like giving people access to the set of information and the knowledge that people who grew up with it have, at an early enough age, given the way the industry is sort of shaped out in terms of recruiting.
Yeah, completely. I completely agree. And even just the second part of what you were saying, which is more relevant, I feel, to you than it is to us at this point, of like higher up executives and C-suite and all also being formed out of that is so important.
Yeah.
To see that path for yourself. But so then what would you sort of, just for anyone sort of listening who has even an inkling of interest in private equity, this is like a two-part question for like freshmen and sophomores and people who aren't immediately recruiting versus the people who are. What would you like say to them or advise them to do at that point in time?
Yeah, it's a question I've been kind of asking myself. So I hope to like, I try to get more involved in terms of recruiting because it's super passionate for me and it's hard to kind of see the way things are shaping out here. So I think half of it is on like me and my peers to be more active and like create dialogue, like given the fact that we're recruiting you the month that you grad, like, you know, in July after you graduate, like we need to be then going to campuses and meeting people and like having the conversations so that people know what it is, because there's just no way that there's just no way that the funnel is going to build unless we're trying to help it build, by giving that information out to people who have the chance to explore it and, you know, their 4-year degree at Cal or wherever. And so I think that's been a huge push for me in TPG, and we're starting a mentorship program, as an aside, where I kind of feel like it's my responsibility. I would say from a perspective of you guys, like for me, it's really like freshman year, and I feel like I got so lucky in the sense that I got that job, but I think it's freshman year being like trying to take more exploration in your classes and being open to other things. Like going to different orgs that you maybe didn't think you'd be interested in and kind of applying yourself in different ways and being more intellectually curious. Not that you guys aren't, everyone at Cal is super intellectually curious, but kind of actually like letting yourself explore that and not coming in with this preconceived notion, which is hard because everyone has a major of like, this is what I have to do, but being really open to the other options. And I think given hostage to your program, like you kind of have the ability to do that a little bit. And I think that that's just so important, because I would have never thought I would want to do finance. Like I thought I wanted to be an engineer, which I think I would have been very unhappy if that was the career I was in. And so I feel very lucky and fortunate. But also like maybe it isn't. Maybe I want to change my mind in 10 years from now, which is totally okay. But I need to be open to that possibility and exploring the things that I like and kind of like jumping into it. And so I think that's super important. And then the other thing is just having a conversation with people that are in the industry, right? Like you don't know what something is until you talk to someone that's done it. Just like when I don't know, like when I look at a business, I don't truly know it until I talk to 10 people that have been working in that industry for 40 years each, right? And I think that that's super important, particularly Cal, which has such a big alumni base. It's talking to them, having candid conversations, especially when you're more junior, like people are going to be very happy to just like give you the honest truth. And then you have a relationship with somebody who's in that industry for years to come, right? And for me, like I have mentors that I worked with when I was a freshman in college who are 10 years older than me that I still feel very close with and I get lunch and dinner with. And I think those relationships form from kind of that honest connection very early on, and that kind of like asking candid questions and all of that. And so that's super important. I would say later on, if you're actively recruiting, for me, I think it's I think super highly of my banking years. I know some people hate investment banking. It's a really rough 2 years, but I think that I learned a lot. I met a lot of people that challenged the way that I think about what I want to do. And that was great from my experience. I would say when you're going through recruiting, I think preparation is really important. I think being confident, particularly as a female, when you go in there and like feel like you have just as right for that job as anyone else. Like knowing your stuff, doing mock interviews, doing all of that sounds weird and uncomfortable, but like apply yourself and try that. And don't be afraid to like reach out to people, right? Like I know people, like guys that pinged 100 people on LinkedIn. Like you guys can do that too, right? It's like feels weird, and I would be scared to do it, but I think that you shouldn't be afraid, because I think particularly women in finance, like I want more women in finance. So the only thing I'm going to be doing is responding to every single message I possibly can, despite the fact that I'm getting very little sleep at times. And I think other women would do the same thing. And so don't be afraid. And it doesn't have to just be females too, right? Like reach out to as many people as you can, particularly the Cal alumni base, which I think is very strong in finance as well. And so I think leveraging kind of those relationships and that connectivity is just super, super meaningful and can pay dividends for years to come.
Yeah, that sounds like a clear pipeline. And I'm glad you said that you are like accessible to contact, because
Totally.
on LinkedIn or something, I'm sure people will be reaching out if they're interested. So I'm excited for them to be able to talk to you. And yeah, thank you so much for doing this and talking to me today. I feel like we touched on a lot of important sort of heavy topics. But yeah, thank you so much.